Gerald, then Kimon.
Really a question for Tony is, I think there's a major disconnect between the sort of stock market, which has done very well in March and now in April, it's gone very nicely. We're closing on 10,000, aren't we? We're heading in that direction, what have you. And I think that's sort of a reflection of consumer confidence, but I don't think that's well founded, because the real story, you've heard about the $14 trillion, for sure that is money that has been promised, or is, whether you're talking about derivatives or these credit default swaps or CDOs or what have you, that money has to be repaid, and when the message gets through to the US people, they will not be able to recover. The car industry is in complete shambles. I heard, and if I think I heard the number correctly, there are approximately 1 million people that work for General Motors and their thing, and there's 500,000 for Chrysler. Those people are really going to either be unemployed or underemployed, and by the time the message gets through on the pension side, I think the unemployment rate, which is 8, 9, 10% in the States, is going to be closer to 20% if you include the people who have stopped looking for jobs. So the real number is closer to 18% rather than 8%. Okay.
That's the people in jail.
Right. And the jails have got more people than ever. So anyway, all I'm trying to say is that I think there's a major disconnect between the people who are being very optimistic and boosting the stock market and the real hard data on the economy.
My reading is that the stock market is going to go up and down, up and down. So there's a lot of money to be made through intelligent day trading. Especially if you catch...
You got classified as a day trader recently.
Yes. And I confess...
And you can use the tax-free, no capital gains tax, no tax.
Yeah, and I confess I'm making money that way. So day trading is going to go up and down, and therefore there's money to be made. And if we look at the historical precedent, that's exactly what happened in 1929, 1930, and so on and so forth. So the financial economy is going to bounce up and down. The real economy, the industrial economy, I think is going to go down for another 3 or 4 years. And we're going to have jobless growth. And so we're not going to be out of the woods for 3 or 4 years. And what is going to emerge is not return to the status quo, something completely different, because a lot of the things that are happening now have nothing to do, or I wouldn't say nothing to do, but are not directly the result of the Bear Stearns and the other things, like the collapse of the auto industry throughout the world, not just in North America. This is something that we have to explain. The collapse of the newspaper industry, which is happening. The collapse of traditional publishing, which is happening. There's all sorts of things which are happening, which signal to me that 2008 is a turning point year, the year we passed, and that we are coming into a new era, which is completely different. And as I mentioned on more than one occasion in this group, this is what my own initiative, the New School of Athens, is going to focus on, what comes after the crisis. Because it's not at all the same thing as before. And I think people are too hypnotized by the ups and downs of the Dow Jones and the others, and say, well, now it's up, so we're out of the woods, everything is fine again. Not so.
Right.
Fundamental change is upon us, and yet we have no idea where we're going, because we have no idea what is patriotic to do. Is it more patriotic to spend or to save? I can make arguments both ways. We should have high interest rates or low interest rates? What got us into trouble was extremely low interest rates. And what do we do to get us out of trouble? Extremely low interest rates.
Okay.